Morning traders, this is Brian Booth, Senior Market Strategist with MF Global in Chicago with your morning update for the softs markets here on Thursday morning. First, just let me remind you again, for anyone that follows these videos, I will be presenting at the end of the day today around the 3 o'clock hour here on our website, a bull and bear presentation that you can log on to through our events page at mfglobal.com. It is it's just a PowerPoint presentation that I do every other Thursday for the website here for traders to take a look at the fundamental and technical data that the market gives us and identify some opportunities in markets that look like the best plays here for either a short-term or a longer-term trade. Since the last time that I did the presentation, it was the Thursday right before that big drop in the market on Sunday night for the metals. And we'll talk a little bit about that, why the markets pulled back to where they did, what drove the markets, and since then, what the markets have done. And what I'm going to be focusing on the most here is using the technicals to your advantage. And we'll identify a few markets. I think we'll look at one of the grain markets after the USDA report, also talk about the dollar versus euro, the overall economy as a whole, and likely take a look back at least one of the metals and give you a few technical levels that you can follow. Now you can log on to our events page and be a part of that in the afternoon. Bull and Bear with Brian Booth, and I hope that you all enjoy. Hope to see you all there. So on to the softs markets. First, coffee, 229.80 was the last. 236.20 is the resistance level that we need to keep an eye out for. So for coffee and cocoa, if you look, we broke below the lows from the last month or so, or the last month and a half, and we continue to hold below that. And surprisingly, even with the strength of equity markets over the last few days and weeks, a couple of the markets have stayed lower. So coffee is one of the markets. If it does start to get above that 236.20 and close above that for a few days, you may see a surprise rally in the market just based on overall strength and weakness in the U.S. dollar. Okay, Dees Cocoa 26.58 was the last. And 26.85 to 27 even is the major resistance. A lot like what you see in the coffee. Any lows on the daily chart will begin to be used as a resistance level, where traders, if they were to buy the market back up, even against bearish fundamentals, just to book gains or take an opportunity off of a support level, they will start to sell off those long positions in the cocoa market, or any market for that matter, much like the resistance level that we saw in the equity markets yesterday. Look at the S&P dropping from its highs, and it all comes into the technicals on the daily chart, and you'll see that if we do start to break above those highs, then what traders would use is those same highs as a support. So we're just doing that inversely for the cocoa. There was some bullish news out of Europe for the cocoa yesterday, but I doubt it's enough to really drive the market home to even midway through the highs and the lows that we've seen over the last few months. So keep your eyes peeled for those technical setups past anywhere it closes above those lows on the chart. March sugar 27.08. That is the high of the day alongside of the 50-day moving average. Put the 50-day moving average in on your daily chart for March sugar. I think you'll see the high of last night's trade, and it comes right in line with the 50-day. So I'm going to continue to follow that. Now there is a level above last night's high. The 28 is where I think I draw a line in the sand for the sugar. I think that we're still going to have a major world surplus. However, sugar will benefit from a weaker dollar and stronger markets, and I think that's what you're seeing. Basically, just some technical trading, some covering of short positions after a pretty decent sell-off in the sugar. Overall, I still think we're going to see lower prices as the year gets long, unless we see one of these surprise rallies like we've seen in sugar before. It has a very, very low margin requirement, and it also, earlier this year, twice throughout the year before the drop, had one of the biggest net long positions being held by hedge funds and speculators at the same time. So it's vulnerable whenever it's at higher prices. However, fundamentals suggest that we should have a pretty major world surplus by year's end, and going into the March delivery date. So I would maintain that we'll probably see lower prices. Lastly, the cotton 101.10 in December. The USDA report that came out was bearish, I think, short term for the cotton. They're just worried about global demand. That's the big thing, is the economies are shaky. We saw how explosive cotton can be, as you saw earlier in the year when it's trading at 140 or so. But I think if things continue to stabilize, and especially if we see grain markets as a whole continue to stabilize and don't see any major pullbacks after the last USDA report, the cotton might surprise you by the end of the year as well. So I maintain a cautiously bullish position in the cotton with long-term objectives, well above the prices that we see here today. But day to day, I don't recommend plays in the futures in the cotton. It's a bit risky, but certainly options on pullbacks to buy long calls going into the end of the year, just to keep your risk low in case there is a continuation of a USDA report that suggests that cotton demand would be low, something along those lines. So, hey, I hope to see all of you at the Bull and Bear presentation later this afternoon. Again, log on through the events page, and if you do have any questions about any of the material presented today or any of the markets that we traded at MF Global, feel free to contact my office at 800-993-6601 or by email at bbooth@mfglobal.com. And remember that futures trading involves substantial risk of loss and is not suitable for all investors.